Morning everybody, it's Chris here from Serene Education with the 4 major analysis update for the 3rd of August 2011. Going to be looking at our euro against US dollar to start with on our 4 majors this morning. Let's have a look at the daily. So first thing we're seeing is a number of selling days after a bearish engulfing. Price failed to rally, and what we've seen recently is a breakout. Noticeably, just recently after we had this hammer on support, we thought we could see a bounce close higher. Price traded slightly higher than the actual high of the hammer, but failed to maintain that, and we saw price pull back and close lower. Yesterday, Tuesday's range, we saw an open and close lower than the previous day, and trading below the 2 moving averages now. And for the first time, we've seen the red arrow and candle on the same time frame. However, the CTC hasn't really matched up because we don't have the red on either side on the bar. It's looking like we're going to be seeing price move lower. By the looks of things, we've seen price move to the downside. We are, however, testing a price support and resistance level, roughly around the 1700 mark, as I mentioned. Would be our first target. As I mentioned yesterday, if we saw price fail to keep those highs, and sure enough, we've seen price testing those levels today. Ideally, we'd like to see a break and close lower than that to give us indication of further downside movement, and if that is the case, then we could see ultimately the 1400 being our next possible target, because we've been there before on a number of occasions. Noticeably, back here in early March through to latter March, a retest of it back in mid-May, and a reattempt in early July. So if things go according to plan, we could see, hopefully we would like to see a bearish engulfing here, another candle closing lower than 1500 to definitely give us indication that we're going lower. And in doing so, you can see that now the swing lows, this candle we saw on Monday has now shown us a swing low, and we could see the intermediate trend is looking excuse me, bearish to the downside, and so we should be looking for further shorting opportunities intraday. So ideally intraday, if we look at our 4-hour and hourly setup, we know that 1700 is a guideline support and resistance area. You can see price is now over the past couple of hours been finally supported this area. It needs to fall and close lower than that to give us an entry level for possible lows. So don't want to get caught in all these wicks. Want to see a bearish engulfing, ideally a candle that is an open at the top and a close of equal distance and fully complete, which will give us an indication of further downside movement, and then we could look at those lows, as I mentioned, on a daily, roughly around the 1400 as our possible target. So we could put that in. So there we go, roughly 1400. I know it goes lower, but daily we're giving 1400, and it's a round number, so psychologically it could be affected. So you can see the swing lows. We had a noticeable one recently, and you can see that the lower are a hell of a lot lower than those ones that's going into it. So we know the price action is still looking bearish because of that. If we saw price coming back to this line, we know it's a bit consolidative wise, but you can see price has really rallied, and we've seen a noticeable breakout, pullback, continuation to the downside. Now it needs to close below this 1700 barrier to get further indications lower. CTC on a 4-hour is giving us all systems go. However, we do need to see that close lower than 1700 to give us indication of further downside movement intraday. Hourly, you can see price is still faffing around that 1700 mark, as I mentioned, 1700. So a nice bearish engulfing to the downside, a full engulfing candle would definitely give us that. Notice we're still seeing swing lows going into this position, so we're being squeezed to the downside. A nice break below that would definitely give us an idea that we're going to look at 1400 as our next possible target intraday. Next up is sterling against US dollar. Let's have a look at the daily. After a bearish engulfing on Monday, we've seen Tuesday with a small trading range, a small dip below the price support, and closing very indecisive, a doji. What we'd like to see now is a decision candle Ideally, a bearish engulfing or bullish engulfing with price. With this bearish engulfing pattern here, we'd like to see further decision if it is to remain bearish to the downside, and if so, we need to see a bearish engulfing and ideally a candle that's going to take us well below the 16,2500, because that seems to be a price support and resistance level on this long-term time frame. You see here on a number of occasions, and early June, way back in late April or early April, parts of May, we've seen a support at 16,2500. So ideally, we'd like to see a break and close lower than that. You can see that the intermediate uptrend that we saw here, swing high, swing high, swing high, this bearish engulfing candle has taken us below that level, and the indecision candle has been sitting now. What we need is a confirmation candle. Ideally, if we're going to see further extensions to the downside, we need to see a bearish engulfing here to confirm that. We're still trading above all the moving averages, however, so we could see another push to the upside on that. CTC is still blue on a daily. Just remember that. Okay. This prior high here wasn't higher than the previous one, but nonetheless a failure at 16,4500 dictated that we are still seeing a resistance level. We've had a resistance level in the past, so we could see that as a major resistance factor, and sure enough we could see price reverting to the downside because of that. So ideally, to see any further progressions lower, we want to see a close below 16,2500 ultimately. So intraday, we want to see the 4-hour and the hourly trading below that level. So 16,2500 is there. Notice the bounces. There's a lot of hesitation around this area. We found support above it as well, but just be aware that the highs now are lower going into this position. So you're seeing a squeeze, so bearish, then very indecisive as we head into this week, and noticeably the highs are getting lower. So we're being squeezed now, and with any squeeze we need to see a breakout. There will be a breakout, guaranteed. Will that breakout come to the downside because we're in a negative downtrend, or we're going to see a bounce here on 16,2500? If so, we need to see a bullish engulfing, ideally all of this indecision. Notice the CTC has gone red arrow, red candles, but the CTC on either side has not met up yet. It needs to see a bearish engulfing to the downside, a close lower than 16,2500 in a candle where you're seeing the open and close pretty much filled in. Little wicks on either side, but very much filled in to give us an indication that the market sentiment is looking bearish overall. And then we can look at our 200 period moving average as our possible first target. Consolidation target roughly around the 1600 or 1500 mark. As our first target, break below the 200, we'll definitely look for further downside movements. We could look at possibly the 1600, and we all know that 1600 on the long term time frame on our daily is a very strong support and resistance level in the past. If I zoom out, you can see the latter part of January through most of February into March, and just recently through the latter part of June and early parts of July, we saw 1600 being tested, and we found price bouncing on that level. So we know psychologically that's a very strong level. So keep that in mind. Need to see at least a breach today of 16,2500. So if you look at the hourly chart, for example, put these in 16,2500, got to see a close, a bearish close, a significant, a candle of that sort, giving us a drive. You've got to see the momentum, you've got to see the money dictating. The market's got to dictate to us that they still want to go short, and that's when we act. And you can see that the highs are getting lower now going into this position. Moving averages are all above it. On the hourly, the CTC is extensively red, so all we need now to confirm is a bearish engulfing. Notice the hourly charts. Big hammer here, another hammer, and we saw upside movement. So we don't want to be faked into that. We want to see a clear candle, a bearish candle, down, and it's got to be pretty much filled in. The whole bar has got to be filled in to give us an indication that there's no indecision in that actual move. It is a decisive move and it is bearish. Then we'll act on it. Otherwise, look for a bullish engulfing candle, equal drive to the upside. Also, ideally, the open and close, as I mentioned, yeah, this candle here, for example, is a great example of that. The open and close, pretty much very decisive updraft, and then we'll look for positions to the upside for that. Next pair is the US dollar against Swiss franc. Yesterday's bullish or bearish engulfing after a spinning top definitely confirmed that we're looking for further downside move on this pair. We can see here that this particular trend, US dollar against Swiss franc, is literally getting battered. You can see that we saw the highs in May of 2010, and where we are now, we can see that price, the US dollar, is trading at an all-time low against this pair, and I cannot help thinking that we're going to see the Swiss franc or the Swiss government intervene soon with an intervention call. Even with the news that came out yesterday with the bailout, etc., like that, for this debt clearing, etc., we're still seeing price hemorrhaging on this particular pair, and we're still seeing lower lows and quite significant lows. This comes after terrible figures that came out on production on Friday, which didn't help this particular pair at all, or the US dollar, and it just gave the market out there cause for concern, because for one, if you're going to see any movement in a particular currency, or any strength in a particular currency, it's going to come from their production. If you're not getting that, if you're seeing a huge slowdown in production figures, etc., like that, not a lot of export and import, a lot of the unemployment rates are down, etc., you're not going to get any bullishness or any drive to the upside, and that's just going to bode really negative for any potential strength or paying back of any debts, etc., like that, very quickly in the future. So still slipping gradually to the downside, or when I say gradual, yesterday wasn't a gradual candle by any measure, but still to the downside, and the CTC is still looking negative for this pair, and we've seen a lot of momentum in as many weeks. Excuse me. So indecisive on the Asian market going into the European session. We've seen the low has not breached from yesterday, so we're still trading above the current low of yesterday's candle. Got to see obviously a break and close lower than that to definitely see further extensions lower, or we could see a potential pause, a very gradual one, a small one. We've seen it in the past, very gradual. So the trading range for the US dollar against the Swiss franc is quite small, and you can see the Asian high wasn't all that high compared to, so very stagnated or consolidative move last night. If we look at our smaller time frames, they're going into the 4-hour pattern, you can see that we saw a slight consolidation over the past 8 hours, 16 hours, 12 hours, apologies, or so. We need to see a breach of that lower candle, and we had a spinning top 4 hours ago, and the 4 hours we're in now, you can see that we're starting to see a slight slip to the downside. So ideally a close, the low of this candle here at 76.21 would definitely give us another further bout of concern. You can see that the swings are noticeably lower going into this pair. We might not even see the prior trend being tested. Noticeably the moving averages are well evenly spaced out on this pair to dictate that we're still seeing lower swings, and sure enough we could see potential punch to the downside, and this is all new territory, so we could look anywhere along the line as possible downside movement. We could look at that potentially as a start, but even then we've just punched to the 161.8, failure to break higher than that. So ideally we could look at possibly 200 mark as our potential second target for this pair. So just be aware, if we see a breakthrough below this, then we're going to see further downside movement overall. If you look at our smaller time frames, you can see this consolidation is taking place, the hourly. Just over the past couple of hours, you can see that the price fell to really above a prior resistance level. Sure enough, another one here, and ultimately the 76.2 mark needs to be breached in order to see further extensions lower. You can see this, the intraday trend line, major trend, is still governing that we shall trading below. Moving average all evenly spaced out to the downside, and hence that move that we saw. So the breakouts, pullback, and then continuation to the downside for this pair, and we're still trading lower. Ideally a break below the 76.20 would definitely give us indications for further downside movement overall for the remainder of the week. Last pair of the day is the US dollar against Japanese yen. Notice the past 2 days, very indecisive. The news came out that we're going to see the US dollar or the American government come to some sort of agreement, bilateral agreement on trying to sort out their debt ceiling issues, etc. like that. There's been talk of raising the ceiling level by $1.4 trillion and trying to cut the debt by the equal amount over the next 10 years. Is it enough to do anything? I doubt so very much because of the very bad negative figures that came out, production, etc. like that on Friday, just to confirm that we are seeing very much a slowdown in the economic factors in the States, which doesn't bode well for any regeneration of jobs, etc. like that, which is going to be able to get them out of this mess to start with. There's been talk that there might be an intervention from the Japanese government because this, after the huge issues they had with the earthquake and the resulting tsunami after that, the yen cannot afford to have a very weak US dollar because the US dollar used to be one of its major import and exports of its goods. Globally too, it doesn't bode well, so the recovery will not really go according to plan if the US dollar keeps hemorrhaging like this, and I don't see any reason why we're not going to see any further downside movement for this pair, and unless we get an intervention. And would that intervention really help in any way? I doubt it. We saw an attempt recently and it failed miserably. Are we going to see the same thing? Just looking at these candles are very indecisive. People are very undecided as to where to go. You can see the past number of weeks price is very much the downside since the break of 80, a price support and resistance. So need to see a decision candle. However, price is trading at the low end of the wick. Is it confirming that we're still that people are still looking for further downside movement? As we see now, the Asian market is still looking, or going to the European session, trading the session. You can see that most of that movement that we're seeing is at the low end of the candle, dictating bearishness. We need to see that close lower than the past two support areas here, roughly around the 76.80 mark, and then we could see further downside movement for this pair. You can see that this particular pair has been trading in a negative trend since the early parts of 2010, and I don't think it's rallying anytime soon because there's nothing really of bullish out there at the moment for the US dollar. I can't see. They've thrown money at this problem, the debt ceiling. All they've done is raise it. Well, that just means they're going to spend more. They have to, because they're in this rut to start with. And I don't see them really seeing any positive figures coming out of the States. It's really going to give them any upside movement. So downside for me intraday is what we should be looking for. Let's have a look. You can see the consolidation now on the 4 hour. Very indecisive as after this long downside trend. It's still trading below all the moving averages. The CTC is still extended intraday on the 4 hour. The same for the hourly. It's still going sideways. Noticeably this very indecisiveness over here, but ultimately you look at trend direction, it's still thereabouts, and it's testing those ones and slightly rolling over. So intraday, if we see a break at least below this level here, the prior support, we could see price continue, and you could look at the bottom ends of this wicks over here at the 76.25 mark before as a possible target intraday. That's it, guys. Look for a break below 77 to give us an indication of further downside movement on an hourly to the lows that we've seen before at 76.20 as our intraday target to start with. Break below that, we're going to see even further lows, but intraday, let's go for those to start with. Break below the 77 on a bearish engulfing with equal drive would definitely confirm that 76.25 would be our next possible target intraday. That's it. Hope you have a fantastic trading day. Please ensure that you follow the rules of the CTC strategy and back them up with sound money management. And most importantly, just make it simple. Look at support and resistance levels intraday, daily, to give you an idea of where price has come from and where it's likely to go to. Back it up with great judgment. Look for bearish, bullish engulfings, breakouts. There are going to be a lot of those going into the remainder of this week as people decipher what's going to happen long term, and just act on those. And most importantly, trade serenely.